I want to quickly have a conversation with you about how to build credit with a loan if you have a low FICO. So, if you have bad credit, it can be very complicated to get a loan, but there are actually workarounds to actually allow you to get a loan, a personal loan this year. Now, you might not have a larger loan amount approved, like you might not get like six digits, like $100,000. But hey, listen, if you're getting 50 grand or 35 grand or 30 grand, that's kind of cool too. And the cool thing is that if when you have a low FICO, it doesn't matter when you apply for a loan or it doesn't matter where you are at. If you have the right strategy, the right hack, you can be approved big time. Okay, let me give you a few trains to really remember this year. The thing is that when it comes to personal loans, it's not just about your credit. A lot of people talk about credit, but FICO score is just one aspect of the whole thing. I mean, if I were to give you 25 grand right now and you have bad credit, how would you be able to really repay me? That's what lenders care about. Your ability to repay the loan that you just given. Okay. So your credit is important, but your ability to repay the loan that you just given, it's also important. So the trains that I want you to really pay attention to when it comes to building credit with a loan when you have bad credit, you first want to think about debt consolidation loans. So don't go for like let's say the straight loans. Think about the workaround. So the first workaround is debt consolidation loans. So debt consolidation loans are pretty are relatively easier to get because you are consolidating debt. So the lender actually is looking at you and thinking, oh, this borrower is pretty disciplined. So you're thinking about actually reducing your loan amount, and you're thinking about actually beefing up your credit score in the meantime, right? So as the name implies, debt consolidation loans are actually personal loans used to consolidate debt. And so let's say you have three credit cards, or you have five credit cards, and or you have even 10 credit cards in general. You have an outstanding balance on every of those credit cards, right? So if you are able to consolidate that debt, maybe you'll be able to pay a lower APR. You can have better terms and conditions, right? And so a lot of things. You can also, in some cases, you can also extend the repayment window that you have on that debt. So that's pretty cool. So debt consolidation loans, that's the first thing I want you to think about if you are thinking about building credit with a loan when you have bad credit. So if you are trying to build credit with a loan when you have bad credit, I want you to think about credit builder loans. So besides debt consolidation loans, credit builder loans are pretty cool. Now, if you're really serious about building credit and you have a low FICO, credit builder loans are cool because they allow you to save money and they allow you to actually build credit at the same time. In other words, credit builder loans are kind of similar to you investing in yourself. You're investing in your own family, in yourself. You're just saving money, right? So what happens here is that basically you do not get the loan from the bank or credit union. So if you get, let's say, a credit union, let's say a credit builder loan for 10 grand, what happens here is that the bank is going to tell you to make payments of, let's say, $500 or $700 for 24 months. And after 24 months, they're giving you the money back. So that's kind of cool because you are actually constituting a little cash reserve for yourself, right? So you are really building credit, but you are investing in yourself too. So a credit builder loan requires you to make fixed monthly payments over a set period, and the period can be it really depends on a lot of criteria, right? It can be 3 months, it can be 6 months, it can be 12 months, it can be 2 years, 3 years, 5 years. So unlike traditional personal loans, like I said, you will not have access to the funds until the loan is paid in full with interest. So this year, for instance, I mean, a lot of people who were trying to build credit during COVID, for instance, they used a lot of credit builder loans because during COVID, a lot of banks were not really giving out regular loans. So if you wanted to build credit, you wanted to increase your credit score at that time, like 5 years ago, you had to really think about credit builder loans. So the cool thing is that you might think credit builder loans are counterintuitive because you don't gain access to the borrowed money until after you have paid it off, right? However, you will establish a history of, let's say, timely payments, and this will actually help increase your score over time. So this can be 50 points, it can be 60 points, or what have you. Now, there are risks. Do you have a lot of risks of using loans to build credit, okay? Because you might have potentially high rates. You might have also an initial hard inquiry, because that hard inquiry could knock off 5 points or 10 points off your credit score. You also have a risk of credit damage, and you have more debts. But if you know how to handle it, if you know how to handle everything, you should be really be in a good position. So the two loans I want you to think about, besides the regular loans, are debt consolidation loans, and credit builder loans. So if you are trying to build credit with a loan when you have bad credit this year, I want you to think about some alternatives to personal loans. Okay, I mean, but like I said, you might reach out to a bank or credit union to get a traditional personal loans. That's fine. But if for any reason you can't have it, if they don't want to give you a personal loan, a regular personal loan, they don't want to give you a debt consolidation loan, or they do not want to give you a credit builder loan, you have the possibility to actually think about a secured credit card. You can think about having a joint account, or you can actually think about reporting alternate payments. So when I'm talking about alternate payments, the thing is that when it comes to building credit, right? A lot of people think, oh, I have to take a loan, I have to apply for a credit card, blah 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 blah. But hey, listen, if you are able to actually reach out to a service such as Experian Boost, you are able to actually report non-traditional payments. For instance, rent payments. For instance, utility payments. For instance, let's say like you have services like subscription fees, for instance. Okay, so you have streaming services, monthly subscriptions. The thing is that you do have a history of making payments. You just got to have that history reported to the credit agencies. Okay. Now, a secure credit card is a lot easier to get, because a secure credit card is actually your money, right? So whatever money you just put on the table, that's the equivalent they are giving you in terms of limit to the credit card. So if you put $500, they're giving you $500. Now that option is actually interesting if you are brand new to credit. If you're really really new, you want to go with a secure credit card. You can also have a joint account, so you can co-sign a loan, or you can become an authorized user on a credit card. That way, you can actually, let's say, profit from, okay, or you can really leverage somebody else's good credit to actually build your own credit. So that's kind of cool too. If you are trying to build credit with a loan when you have bad credit this year, you have to really pay attention to those credit builder loans. I know I've said this before, but the thing is they do really work, and they work in a fast manner. Why? Well, because there is no risk to the lender. There is no risk to you too. And on top of that, you are basically saving money. You're putting money on the side. You're actually constituting a reserve, like a rainy day fund. Okay. What I want to say here is that it's important to understand that the funding timeline is really going to play a big role. So when you think about going for a credit builder loan, please go for a credit builder loan that actually spans several months. Don't actually go for a 6 months credit builder loan or a 12-month credit builder loan. No, you want to really you want to shoot for the big enchilada. I mean, listen, if they give you 2 years, take 2 years. If they give you 3 years, take 3 years. The goal is to actually have a history of positive payments, and have this consistency, and that's what you want to build. You want to build that consistency that shows that, hey, listen, I do have a great way to take care of my credit, because I am a responsible borrower. Okay, that's what the lenders want to see in you. That's what credit agencies want to see in you, a responsible borrower. Okay, you are able to actually build credit from scratch. And the cool thing is that the money is locked in a savings account. Okay, the money will be only available after you make monthly payments. Okay, now the thing is that there are some lenders, especially credit unions, that could agree actually to release a bit of the loan at a time. But normally, when you think about credit builder loans, the majority of lenders including credit unions across the country, they're just going to release the cash once the payment is made in full. Okay, but it's good because if you try to build credit with a loan when you have bad credit, you want to go with a credit builder loan because that loan is very easy to qualify for. Okay, because again, like I said, the loan is not a risk. Giving you that loan is not a risk to actually to the lender because you bearing all the risk. You are bearing all the risk, so that's kind of cool to the lender. So I want to talk to you quickly about the best credit builder loans that you can really contemplate this year. If you are trying to build credit with a loan when you have bad credit, I want you first to think about Credit Karma. Now, a lot of folks know Credit Karma as a platform where you actually check your credit score. But since they were bought over by Intuit, the maker of QuickBooks, right? Because they were bought over, they're trying now to really extend credit to all kinds of people, and particularly the subprime population. Subprime means that you have bad credit. Okay, so Intuit Credit Karma is kind of cool because they will give you cash real fast. In terms of APR, they do not charge interest. Okay, so the loan amount starts at 500, and they can go all the way to 5,000, depending on the history that you have and how low your credit score currently is. So if your score is really low, they will start you small, like they'll probably start you around 500, and as you actually build that positive history of consistent payments, they'll increase the loan amount. Again, we are still talking about credit builder loans. We're not speaking about regular loans. We're not speaking about traditional loans. Here, you are making payments, and after you are done making the payments, they'll give you your cash back. So the cool thing about Credit Karma is that there are no fees or interest charges. There is no credit check, so your credit score is not going down. Okay, and this Credit Karma credit builder loan doesn't require monthly payments, and your payments is actually reported to all three credit bureaus. So every single month, TransUnion, Equifax, and Experian will know of your good habits, that you are really paying your loan on time. The second credit builder loan I want to share with you is BMO Harris. Okay, BMO does a great job at actually extending credit builder loans, but they charging you APR going from 10% to 19%, and the repayment window is 2 years to 5 years, and the loan amount starts at 1,000. Okay, and the only thing is that BMO is charging you, in addition to the APR, they're charging you $75 loan processing fee. So something to really think about. So if you don't like it, don't go with BMO. And if you are a current BMO customer, you can take advantage of the autopay interest rate discounts from a BMO checking accounts or a BMO savings account. So they're shaving off like 0.25% off the APR. Another credit builder loan that I want to share with you is actually one from DCU. So DCU is a credit union. So if you're looking for a credit builder loan from DCU, from a credit union, think about DCU. And DCU has an APR of 5%, which is relatively low when you compare it to the one that BMO is charging you, right? So DCU is charging you 5%, and they're giving you loan amounts that go from 500 all the way to $5,000, 3,000 to 5,000. And DCU was really big during COVID. A lot of borrowers were just going to DCU to sort of rebuild their credit, because everybody was home, and people were just taking the opportunity to build their credit while they were just home, waiting for the government to maybe hand out some subsidies, if you will. And so you have a low APR with DCU. You can choose the loan term and amount, and the loan actually funds earn interest. So when you actually put cash in a quasi savings account with DCU, they will pay you interest on that amount. You also have another credit builder loan that I want to share with you. It's actually Money Lion. So Money Lion actually is cool because they are known for giving regular loans, but for the last 2 years, 2 to 3 years, they started really venturing into the credit builder loan sort of territory. So with Money Lion, you are looking at an APR that goes from 5% to 30%. Pretty high though, really really high. But hey, listen, it is what it is. The loan terms you are looking at 12 months, and the loan amount is a little low. I mean, they're not giving you that much. Can you imagine? They're giving you like somewhere $100 to $1,000. On top of that, you have to really pay a $20 per month membership fee if you want to take advantage of that loan from Money Lion. Okay, now is it really interesting? If you were to ask me, I would say no, because the loan money earns interest, that's for sure, but they're still charging you $20 a month, and they're charging you also an APR that goes from 5% to 30%. So the interest that you are earning is probably a 1 or 2%, and when you compare that to what they're charging you, you really are losing money. Okay, there is no credit check. They report to all the three credit bureaus, and you also have customized advice on building credit. So that's kind of cool. But hey, for the price they're charging you, in my view, this is a little too much. I mean, MoneyLion is great in terms of being a fintech, a very successful one at that. But their credit builder alone is a little too much, if you were to ask me. So if you are trying to build credit this year with a loan when you have poor credit, you have to really understand that it's all about evaluating your budget in the first place. I don't care. I don't care if you want to get a 1,000 or a 10,000 credit builder loan. You still have to evaluate your budget to make sure you are able to make those payments. Because remember, you're not getting any money up front. They're not giving you any money up front. Okay, you are actually paying into a certain pot for you to build credit that way. So be very careful and make sure that you have the budget for it. You got to look at your cash inflows and cash outflows and say, listen, I think I can probably make 300 or 400 payments every single month. That's no problem. And please don't jump real fast in terms of getting a credit bureau loan. You want to really compare offers, okay? Like I told you, I only gave you four loans: Credit Karma, BMO, DCU, and MoneyLion, right? But you have to really understand which one really work for you. And you also make sure once you actually get a loan, please make sure you make your payments on time, okay? Because otherwise, all the benefits that you have by really applying for a credit builder loan, you will lose that benefits. Because even if they're not checking your credit to start, once you miss payments, your credit score will take a hit, big hit. Okay, so be very careful on that front. But as you make payments, please check your credit score to see the impact of those positive payments, like every 3 months, every 6 months, every year, just to see what's happening. Okay, and you also want to bulk up your emergency fund if possible. See, the whole thing is that even if you have a credit builder loan, you still have to have a certain cash reserve because you just never know. In this economy, things can go crazy, and the last thing you want is actually to be in a position where you have two jobs, you're working hard, you're working 20 hours a day or 18 hours a day, and you're still realizing you're not really pulling up enough revenue to be able to really afford things that you or your family really need. Okay, so be very careful there. So you want to really bulk up your emergency fund, your rainy day fund, so that if something were to happen to you, you are able to really get things done real fast. Okay, just remember that you want to give yourself 3 months to 6 months. Don't really rush things. Don't expect things to happen overnight. Your credit score didn't go down overnight. It ain't going back up overnight. I don't care what people tell you on YouTube or on TikTok or have you. You're not going to increase your credit score over time. It takes about 3 to 6 months, and ideally a year for you to see, let's say, a constant change, a permanent change, positive change that is, on your credit score. In conclusion to this conversation, I spoke to you about building credit with a loan when you have bad credit. So I give you the trends. I spoke about debt consolidation loans. I spoke about credit builder loans. I spoke about traditional loans. Okay. And I really spent a little bit of time on credit builder loans and how they can really help you big time. Thank you so much. God bless you. I will see you next time. Until then, remember, stay marvelous.